Cash, your secret weapon. Right now, you probably have some cash sitting in your savings account, earning basically nothing. Your friends are telling you you're an idiot. Cash is trash. You're losing money to inflation. But here's what they don't understand. When the next crash hits, you'll have something nobody else has. Power. While everyone else is desperately trying to get cash, you'll be the one with cash ready to buy. Think about 2008. Remember how fast everything fell apart? Your neighbors were losing their houses. Your co-workers were getting laid off. Everyone needed cash immediately. They were selling their stocks, their cars, their jewelry, anything to get liquid cash. And they were selling for pennies on the dollar. If you had cash during that time, you could have bought that house you always wanted for half price. You could have scooped up blue chip stocks, trading for nothing. You could have started that business when commercial rent was dirt cheap. When markets crash, everyone needs cash right now. They'll sell you anything for whatever you offer. You become the buyer in a seller's market. The wealthy understand this. That's why they always keep cash reserves. Not because they love earning 0% interest, because they know crashes are coming, and cash is ammunition. When everyone else is forced to sell, they're ready to buy. Gold, your insurance policy. You've probably thought about buying gold, but felt stupid. Put that money in Tesla. Bitcoin is the future, your friends say. You feel like an idiot holding shiny metal while everyone else gets rich on technology. But here's what 5,000 years of history teaches us. Every empire falls. Every currency eventually becomes worthless. Every financial system eventually collapses. But gold survives everything. When Rome fell, gold was still valuable. When Germany's currency became toilet paper in the 1920s, gold bought food. When currencies die, gold lives forever. Think about what happened in 2020. The government printed more money in 1 year than in the previous 50 years combined. Your dollars became worth less overnight. But gold exploded higher as people realized their paper money was becoming monopoly money. The best part? You don't need to buy gold bars and hide them in your basement. You can buy gold ETFs, gold mining stocks, even digital gold. The key is having exposure to something that holds its value when everything else is falling apart. Gold isn't about getting rich quick. It's about staying rich when everything else is getting poor. It's your insurance policy against financial chaos. And in a world where governments print money like it's going out of style, that insurance is becoming more valuable every day. Dividend stocks, your paycheck during chaos. You've probably ignored dividend stocks because they're boring. While your friends are buying the latest hot growth stock that's going to the moon, you're looking at utilities and consumer staples. But here's what happens when the market crashes. Those sexy growth stocks that everyone loves, they fall 70, 80, even 90%. But your boring dividend stocks, they barely fall. And here's the crazy part. They keep paying you. Every quarter, like clockwork, dividend checks hit your account. While everyone else is losing money, you're getting paid to own stocks during a crash. It's like having a job that pays you even when the economy is falling apart. Think about companies like Coca-Cola, Johnson & Johnson, Procter & Gamble. People still need to drink Coke, use Band-Aids, and buy toothpaste even during recessions. These companies keep making money and keep paying dividends no matter what's happening in the economy. Let's say you own 1,000 shares of a stock, paying 4% dividends. That's $40 per share per year in dividends. During a crash, the stock price might fall from $100 to $50, but the dividend stays the same. Now you're earning 8% on the current price. You take those dividend payments and buy more shares at $50 instead of $100. Now you own more shares, earning more dividends, which you use to buy even more shares. It's a compounding machine that works best during crashes. These are called dividend aristocrats. Companies that have increased their dividends for 25 consecutive years or more. They've survived multiple recessions, multiple crashes, multiple crises, and they've kept paying shareholders through all of it. They're like rental properties you don't have to manage. They pay you to own them, especially during crashes when everyone else is bleeding money. While growth stocks are gambling, dividend stocks are getting paid to wait. Stocks, your time machine. Here's something that will blow your mind. Every single stock market crash in history has been followed by a recovery that made early buyers filthy rich. Every single one. The 1929 crash. If you bought in 1932, you made 10 times your money. The 1987 crash. Early buyers made 5 times their money. The 2008 crash. Same thing. Remember March 2020. The market fell 30% in a month. Everyone was selling stocks and hoarding toilet paper. The world was ending. But if you had taken your stimulus check and bought index funds, you would have made 300% in 2 years. Not because you're a genius, because you understood something simple that most people forget during panics. Crashes are temporary. Human innovation is permanent. Companies adapt, economies recover, stocks always come back stronger. The pattern never changes. Crash, panic, recovery, new highs. The stock market isn't just an investment. It's a time machine that lets you buy tomorrow's wealth at yesterday's panic prices. But here's the key. You can't try to time the bottom. Nobody knows exactly when stocks will stop falling. The secret is to start buying when everyone else is selling. When the news is terrible, when your friends think you're crazy for buying stocks. History shows us that every crash is followed by a recovery that reaches new highs. The question isn't whether stocks will recover. The question is whether you'll be holding them when they do. Real estate. Your wealth multiplier. You probably remember 2008. Houses were getting foreclosed everywhere. Families losing their homes. It was devastating to watch, but it also created more real estate millionaires than any period in American history. How? Smart investors understood something crucial. People always need places to live. Even when they can't buy houses, they still need to rent. When home ownership becomes impossible, rental demand explodes. You could have bought a house worth $400,000 for $200,000, put 20% down, so $40,000 out of pocket, rent it for $2,000 per month. Your mortgage payment might be $1,200. You're making $800 per month in cash flow. But here's the beautiful part. As the economy recovered, your property would have doubled in value back to $400,000. You made $200,000 in appreciation. Plus, you collected $800 per month in rent for 10 years. That's another $96,000. But you don't need to buy entire houses. You can buy REITs, real estate investment trusts, that own hundreds of properties. You can invest in real estate crowdfunding platforms. You can buy shares of rental properties through apps. The key is understanding that real estate crashes are temporary, but people's need for housing is permanent. When you buy real estate during crashes, you're not just buying property, you're buying cash flow that will pay you for decades. Commodities, your inflation shield. You've seen what happens when supply chains break. Remember when oil prices went negative in 2020? People were literally paying others to take oil off their hands. But here's what happened next. As the economy restarted, supply shortages hit everywhere. Oil, metals, agricultural products, everything spiked higher. If you had bought commodity funds, when everyone thought you were crazy, you would have tripled your money. Because crashes don't last forever. And when economies restart, they need stuff. Raw materials to build things, energy to power factories, food to feed people. The stuff that makes civilization work. Commodities do something stocks and bonds can't. They protect you against inflation while letting you profit from recovery. When governments print money to fight crashes, that money has to go somewhere. And it usually flows into real things first. Paper assets like stocks and bonds can be created out of thin air. But commodities are real. You can't print oil. You can't create gold with a computer. You can't manufacture farmland. When money gets printed, commodity prices rise. You're not just buying commodities, you're buying protection against the money printing that always follows crashes. While paper assets lose value to inflation, real assets hold their purchasing power. The easiest way to invest in commodities is through ETFs that track commodity prices. You can buy funds that invest in oil, gold, silver, agricultural products, or broad commodity baskets. You don't need to store barrels of oil in your garage. Commodities are cyclical. They go up and down with economic cycles, but during crashes followed by money printing, they tend to explode higher as both inflation and economic recovery drive demand. Small businesses. Your opportunity machine. You've probably thought about starting a business but figured the timing was wrong. But financial crashes are small business gold mines if you know where to look. Commercial rent gets cheap. Talented workers become available. Competition disappears. If you got laid off during the next crash, instead of looking for another job, you could start a consulting business. Use the skills you already have. Offer them to companies that need help but can't afford big consulting firms. Your timing would be perfect. You'd build your business while costs are low and competition is weak. Office rent is cheap because nobody wants commercial space. Talented employees are available because they got laid off. Marketing is cheaper because fewer companies are advertising. By the time the economy recovers, you'd have established business with loyal customers. You'd have built something valuable while everyone else was just trying to survive. The crash wouldn't destroy your career, it would launch it. Some of the biggest companies in history started during recessions. Disney started during the 1929 Depression. IBM grew during the 1930s. Microsoft launched during the 1975 recession. Airbnb started during the 2008 crash. The key is starting lean. Don't take on big expenses or long-term commitments. Bootstrap your business with savings or small loans. Focus on cash flow from day one. Build something that can survive and thrive, even if the economy stays bad. Small businesses that start during crashes have a huge advantage. They're built for tough times. When good times return, they explode with growth because they're already efficient and profitable. Alternative assets. Your elite playbook. You probably don't know this, but the ultra-wealthy don't just buy stocks and real estate during crashes. They buy things you've never even heard of. Art, collectibles, private businesses, intellectual property, assets that aren't traded on any exchange. During 2008, billionaires bought famous paintings for $20 million that sold for $60 million 3 years later. Not because art got more valuable, because wealthy people needed cash during the crash and sold their collections cheap. This is elite investor psychology. While everyone focuses on public markets, the real money is made in private deals, buying entire companies, patent portfolios, rare collectibles. Assets that don't show up on CNBC, but make people generationally wealthy. Alternative assets work differently during crashes. They're illiquid, so prices get disconnected from reality. There's no daily market pricing like stocks. Sellers get desperate and accept whatever they can get. Smart money swoops in and buys assets worth millions for thousands. Think about collectibles, classic cars, rare watches, vintage wine, sports memorabilia. During crashes, collectors need cash and sell their prized possessions, but these items are rare and can't be reproduced. When the economy recovers, prices explode. The key with alternative assets is doing your homework. These aren't liquid markets. You can't just click a button and sell, but that illiquidity is exactly what creates the opportunity. Patient money gets rewarded with massive returns. And if you want to keep learning about money, finance, and how the world really works, make sure to subscribe and hit that notification bell. Because understanding the game is the first step to winning it.